Okay, so you keep hearing that now is the time to invest, and you know of all these stories of people going in, investing, and making a killing on their returns. And you want to be one of those people, right? Well, before you invest anything into the stock market, this is the video you need to watch. I'm going to be telling you things that's going to help save you some money, time, and frustration when investing. My name's Rich Kimmy, but we're all friends here, so you can go ahead and call me Kim. This channel is about entrepreneurship, financial education, and side hustles. And make sure you stay till the very end of this video because I have some info that's gonna really tie everything together. Many people, including myself, believe that because of the coronavirus, we're heading towards a recession at best and depression at worst. And unfortunately, both of those situations are, not good. And many people suffer during both of those situations. On the flip side, though, recessions in the past have created some of the largest opportunities for wealth to be transferred. So the biggest wealth transfers happen during recessions and depressions. So one of the ways that this big wealth transfer will happen is through stocks and investing. In fact, last recession, which was the recession in like 2008, Warren Buffett was able to make $10 billion during a recession. So that just shows you how much money could really be made during a recession. Many people have been hitting my DMs and texts and asking me, for advice when it comes to investing because they know I'm investing. And someone actually even asked me to buy a course, which I thought was really cool because I don't sell courses right now. But instead, I'll put you guys on to some free game in this video and I'll tell you 5 things that I really wish I knew at least before I started investing. And these tips are going to put you light years ahead of new investors that are just going in blind. So pay attention and enjoy. So the first biggest piece of advice I can give you is to actually learn how stocks work. You'd be surprised how many people go in there blind and just basically start gambling with their money, and that's not a smart way to go about this. This should be just slightly more safe than Vegas, right? And I mean, really think about what you're doing here. What you're doing is you're becoming a part shareholder in a company. Anytime you buy a stock, you're becoming a part owner in that company. And that's important. That's something you should be proud of. You're now a business owner because you literally own part of a business, right? But not only that, but you can slowly keep buying into the company until you even own the company. And that does happen. Back in 1996, Warren Buffett owned 51% of Geico. And at that point, he decided that he'd prefer to be the sole owner of it, and he bought the remaining 49% of the company and became the sole owner of Geico. So when it comes to stocks, you definitely really need to learn more about what you're doing. Read books on stocks, read charts on stocks. Watching this video on stocks, you're getting a little head start. You're doing something to take a step towards learning, but keep learning, continuously learning. Learn how the news affects stocks. For example, Wall Street rated that the iPhone 5 would sell between 6 million units and 10 million units on its first weekend being offered. Instead, the iPhone 5 sold a little over 5 million units. On September 21st, 2012, the official release date of the iPhone 5, Apple opened at $702.56. As of market close on November 9th, so 3 months later, Apple traded at $547.06, a 22% drop in value. Now, predicting exactly a 22% drop in value would be very calculated and maybe very difficult to do. But knowing that a company is not meeting expectations that a large group of people have for it is definitely not as difficult. Nice. Okay, so let me give you an easier to spot and way more recent example. When several different news outlets are telling you all at the same time that a virus is going to shake the world and make the airline industry crumble, it could be smart to listen to that. I mean, they bring in their own professionals and analysts to really do a lot of the work for you. And because literally everybody seemed to have the same opinion at the same time, it would be smart to take this as news that could affect the stocks. Let's look at American Airlines stock. In mid-February, it was trading for about $30. But if you just fast forward to a couple of months later, it was at 1/3 of the value. It was trading around $10. So these are the signs in the news that we need to be utilizing. As the name implies, news is associated with the presentation of new information. And the more new information you have, the easier it is to predict what the stocks will do in the future. Number 2 spins off from number 1, right? So you're going to learn about stocks. So number 2, you can think for yourself. You don't want to listen to a bunch of differing opinions on things with stocks. You kind of really want to just educate yourself and come to decisions yourself, you can definitely listen to what other people have to say, but don't make decisions solely off of what other people have to say. That's not a good look. That's not a good idea. Just don't do that. And there's a bunch of people out there who claim they're gurus. I don't claim I'm a guru. I know I'm not a guru, right? But there's a bunch of people out there who claim they're like a stock guru, and it's just not a good idea to blindly follow them, because at the end of the day, if you lose your money, you lose your money and they're not losing anything. Number 3, really quick one, but also very good for people who are definitely like beginners or just intro, don't have a lot of money to invest, but want to start learning more. Paper trading is a thing. You should paper trade. You're able to just learn how to invest without really risking the money. So you get to just kind of play it like it's a game until you understand more about how to actually do it. And then you can start using your money. And hopefully by that time, you got all the like dumb investments that you would have made without really knowing anything and just kind of guessing out the way, and you can make your well-educated decisions that's going to make you a lot of money. So paper trading is a thing. 10 out of 10 recommend it. I will link down below paper trading simulator. It's probably the most popular one, so I think that could be a good option for beginners, so go ahead and check it out. What's good, y'all? I just wanted to give a huge thanks to our sponsors. Now, this is our first video, so the chances that we even got a sponsor next to 0. So give it up for not 1, not 2, not 3, but 3.5 of our sponsors. The comment button, the like button, the subscribe button, and that 0.5, that notification button, y'all. Oh, sorry. Y'all are learning right now. Y'all are learning a lot, and I'm going to let you guys get back to that. My bad. I'm sorry. Go back to that. Number 4 is going to be have a plan. Don't just invest in companies without knowing anything about them. We've talked about that though, so I'm going to glide straight over that. But also know like your investing strategy. Okay, so with stocks and investing, there's like 3 main types of investors / traders that you're going to hear about. And that's going to be day traders, swing traders, and then long-term investors, or people who just, hold the stock. So let's go a little bit into what each one is, right? Let's brief definition. So a day trader is somebody who buys a stock and sells a stock the same day. Now, maybe they use large amounts of money. That way, small percentage gains actually give them a high return overall, because they're opening and closing the trade within the same day. Let's move on to swing traders. So swing traders do a similar thing, but instead of it being within the same day, it's within the same couple of days or within a few weeks, maybe a month, things like that, right? That's what swing traders do. That's a lot more common because it takes less attention than a day trader does. A day trader really needs to be very focused, right by their computer, ready to open and close a transaction, because even seconds can make a huge difference for how much the day trader makes on a transaction. So that's really big. For swing traders, of course, obviously you're going to continuously watch this stock, but you don't have to literally just be locked in 24/7 ready to go. So that's kind of more of what I like to do, my style of trading, swing trading. And then you have long-term investing. So with long-term investing, that's like you buy a stock with the intent to hold it for a while, probably a couple of years. So maybe it's a stock that you think is going to be a very successful company in the future, and that's why you buy it. I just wanted to give you guys a quick rundown just in case we weren't sure about that part. There's a lot of people that lose money because they don't have a plan. They don't know exactly what they want. When you're investing in a stock, say we invest in, I don't even know what to say.
One eternity later.
So let's say we invest in this stock, right? It's the Rich Kimmy stock. I just made it, right? Actually, it's my stock. $100,000 stock, right? So we invest in this $100,000 stock, and its value goes up to $200,000. It's crazy. It's doing numbers, right? It's doing numbers. It's at $200,000. We've made literally 2 times what we put in. We put in 100,000, now we're at 200,000. We made 2 times what we put in, right? Do we keep holding? Do we sell? You need to have a plan in mind. You need to know what percentage gains, or like what exactly are you looking to do with this stock so you can sell. Just have a plan. Just know what you're doing. Know your strategies. Don't just aimlessly go in there and then figure it out. I mean, actually, you can do what you want, but I wouldn't aimlessly go in there and then figure it out. Number 5. This is very big, honestly. It is hard not to trade with emotion. It's very hard not to trade with emotion. And what do I mean by that? Well, I just mean I know a lot of stories of people who, got in, they started investing some money, this and that, and then the value of it actually started going up. Like, they actually started making money in stocks, right? So the value of it started going up, And then instead of pulling out whenever they were satisfied with kind of like whatever, return on their investment that they had, they kind of got, some will call it greedy, selfish, I don't know. I just think it's a natural human reaction with emotions to just want to stay invested, right? But it gets up very high, and then all of a sudden they just don't want to pull out. They thought they were going to pull out when they made, 10, 15, 20% returns on their investment, but they're sitting at 22. And they're like,
it might go up to 30, right? It might go to 30% returns, and then I'm big balling.
So that's nice, but if you don't have the information, backing up why you should stay in, and keep holding it, then it might be a good idea to sell it if you've already reached your, percentage profit that you wanted to make. A lot of people make the mistake of staying in because, oh, it's doing good, it'll do better. And then eventually it starts going down and they're like, oh, it'll go back up. It was up before, it goes down. Oh, it's going back up, it goes down, and now they're left with literally half of the investment that they put in when instead they could have made way more. So it's hard not to trade with emotion. So constantly make sure that you're checking yourself when you're investing. That's one big thing I'll say, because once you actually get in there and you actually start making some money, you want to just keep making money, and the stock doesn't care that you want to keep making money. It's really big that you just consistently check yourself and make sure that you're not trading with emotion. All right, y'all, I'm gonna hit you with one more. I know I said 5, bonus tip, really small one. Diversify your portfolio. A lot of people say that, just thought I should mention it in this video as well. Diversify your portfolio. Make sure you're not 100% invested in one stock. Why? Because you, at the end of the day, you really don't know where it's gonna go. You can put together all this info, but who knows where it's gonna go, right? So if you lose money on this stock, maybe it goes down like 10% or something like that, but you're very diversified. Maybe your other stocks are making money and your overall, gains are gains. So basically, the more that you diversify, the more chances or opportunities you're giving yourself to be successful, and you don't want to be all in on one company that you don't even really control. Okay, awesome. So if you remember at the beginning of the video, I said make sure you stay till the end because I have some good information for you guys. So let's get into the... Wait, why did I say don't invest? This whole time we were just talking about, tips for new people getting into investing. That makes no sense. Well, I mean, like, obviously that's what this video is about, so we know that too. Oh, okay, look at my sign looking out for me. Well, I appreciate the pub, but hopefully they already got that out the way. Oh, okay, finally. I was about to say, we're about to get tired of that. Free stocks. So Robinhood and Webull are 2 of the most popular platforms to trade on as an individual. You get to trade commission free, which is a huge benefit, and I have the links down in my description if you'd like to go ahead and get some free stocks. So I'm basically giving you free money. Go ahead and grab it. I don't even think that you need to deposit any money to get the free stock. So you can literally just open the account, get the free stock, and start paper trading and doing other things we talked about in this video. But yeah, I mean, if you want free money, go ahead and get free money. I'm giving y'all free money. All right, y'all. Well, that's it for this video. I really appreciate y'all watching, especially all the way to the end. Making this video was so much fun. This is the first YouTube video I've made. This is a bunch of fun. Hopefully I like editing just as much, but I will be posting here every single week. Hopefully more than once a week, but we'll see how that works. So instead of checking back consistently and seeing whenever I will be here, just go ahead and subscribe and hit the notification bell, and you'll get notified every single time I upload, and everything will be good. So yeah, go ahead and tell me down below how you think I did, if you have any video suggestions, anything like that. And yeah, we're good. We're done. This is it. Hope you enjoyed.